Good afternoon, friends. This is Prashanjit. I will be taking you through today's session. I have reshuffled the session, and today we are going to learn about approach 2, which is poor and bad approach. I felt this session, I need to reshuffle because otherwise there will be no continuation of the topics. Yesterday we learned about approach 1, so I wanted you to go through the poor and bad approach as well. Okay. So today we are going to learn about approach 2, which is poor and bad approach. Please give me a quick check whether you can hear my voice and see the screen. Yes. So let us learn about approach 2, which is poor and bad approach. Okay. So before I go and do so, I would request each one of you to go through the disclaimer first, and then we'll start. Okay, let's learn approach 2, which is poor and bad approach. In the last session, we have learned the good approaches, right? But if there is good approach, there has to be some bad approach as well. Now, what is approach? So, understand, analyzing the key levels and the trend is not enough to take a trade, okay? So, we also need to analyze how price has arrived in the key level. So, we have to analyze the current market price. Understand one thing, the trend or the key levels are the past. We arrive at a trend or we arrived at a key level by looking into the past data, right? So past data, the trend, the key level are important, but equally important is the current data. Okay, how price is behaving in the current time, how price is coming down to your key level. That is very, very important. Okay, so if it is coming in a poor and bad way, that what will happen, your key level can break. Okay, if arrival is good, big revert to these trends happen. If arrival is bad, the key level can break. In our approach session 1, we discussed about compression, free drive and liquidity spike, which are said to be good arrival to a key level and ensures to achieve a big reward to this trade. Okay. However, there are certain price arrivals in a key level which are not good, and hence the key level fails to give a big reaction or no reaction at all. This type of arrival is known as poor and bad arrival. So one of the poor and bad arrival is known as distribution in approach. Okay, so what is happening here? Think price is moving up, comes down, breaks resistance, comes down, then creates a base and breaks or engulfs another resistance. What kind of a pattern got created, friends? Which trap zone is this? Which trap zone is this? This is an MIP, right? So we will draw it and we will have a proximal line and we will have our distal line. The trend is up and there is a demand MIP. What we will do? We will certainly want to take a trade, okay, in this MIP. But what happened? This is a good zone. This is not a bad zone. Now what happened? Price moved up and suddenly price started moving in a consolidation inside a support, a major support and a major resistance. And then after the consolidation, this is happening just before your MIP, okay, demand. After the consolidation is completed, price breaks down, price breaks down, engulfs the support. Once the engulf of the support of this consolidation happens, we know one thing for sure, that this is a distribution in price form. Okay, so once the distribution is formed, we know that, even if we want to go long in this MIP, right, our target is limited. Okay, so this is a very poor and bad approach, because we have a fresh distribution opposite to our MIP. So in this case, what will happen? Our MIP will certainly give some reaction. It is not that it will not give reaction, okay? But our max target will be the distribution there, okay? And price will go hit the distribution, and the distribution eventually will fire, and the MIP will break and price will drop, okay? So this is a poor and bad approach. Now one thing here, if the distribution which formed just before your zone, when price is arriving towards your zone, is tested or compressed, in that case, your MIP is going to hold and the distribution is going to break. Are you all clear on this? Have you understood what I said? I said if the distribution is compressed, that means this distribution is made of tested zones, a series of tested zones, then your MIPs will have the power to take the price up and break the distribution. Now this distribution will act as a accumulation. Okay, so two things here. One, the distribution is fresh. Understand? Yes, why not, Richter? Why will not it contain, what will happen here inside? When you go, you will find this is a drop base rally, then there will be a base candle which will touch this drop base rally. Then here there will be a break limit zone which will touch this base candle. Then thereafter another maybe base candle which will touch this. So by this will be a beautiful compression and price will come down, and in that case price will go up. Okay, so compression can be anywhere, right? You need to be very, very careful about compression. Okay, so two things: if the distribution is fresh and it has good levels, or maybe a hidden zone, then your MIP is going to break. This is a poor and bad approach. But in the same case, if the distribution is compressed, the MIP is surely going to work and price will break the distribution, right? So compression, no compression, and MIP opposite distribution, the MIP target will be only till the distribution, because price cannot go beyond that. So if, understand, there are two decisions you can take in this price chart. One, when you see in approach towards your zone, a distribution formed which is fresh, okay, and then you can take two decisions. One, you can think of taking a trade here, but your target will be small, or you can completely abort this trade. You can completely ignore this trade. So this is two things you can do here, two type of decisions. Okay, how to distinguish between compression and distribution? Come on, Richter, compression is different and distribution is different. Okay, distribution is identified when a consolidation is broken and it is engulfed in the lower side, that is distribution, and compression is tested zones. They are two different things. Don't get confused. You are very, very confused right now. A distribution can have a lot of tested zones, right? Price could have engulfed and immediately tested the distribution and then could have come, right? Possible. So tested zone is a different concept and distribution is a different concept. Okay, so they are not same, that there is a distribution, and I mean, compression and distribution are not two same things, right? Compression is means that the distribution already worked out. The compression tells us that the distribution is already worked out. Okay, and should tested supply demand both in this distribution required? Yes, then only it will be compressed. Okay, so this is the breakdown happens the same way. If you are trying, if this trend is down and there is a supply and you want to, I mean, trap zone, you want to short, and in approach you are seeing that accumulation in is forming. Okay, so what happening here, there is a support which got engulfed. After the engulf, price moved up, rally, base, drop, and with the drop, MIP got created, a supply MIP. I know this MIP can be traded, right? There is a distal line, there is a proximal line, okay? But what happened? This is a good zone. Price moved down in front of the MIP. Price created a sideways movement. I don't know this is an accumulation or a distribution, but once the price engulfs the resistance, I know this consolidation is a accumulation, and this is a fresh accumulation which is there opposite to your zone. Then what will happen? Your zone, this is a poor and bad approach. Your zone may give some reaction, but the reaction, the target will be limited for it till the distribution. And or, I mean, if this is the case, you may think of aborting the trade as well. You can take a trade till the distribution, or you can abort this trade. So what will happen? Price will go up, go down to the accumulation. The accumulation will fire and price will move up, because after accumulation we expect the trend to change. All right. So this is what happens in the price charts many times. So this is a bad approach if you find accumulation forming opposite to the zone. The same way like the distribution, if your accumulation is tested here in this place, then it will break again. Okay. There are a couple of examples of that in current market price in some of the charts if you go and check. Okay. So it broke. Okay. So the next type of poor and bad approach, I mean, before I talk about that, this is an example. This is a key level. This is a reverse zone. Okay. This is a reverse zone where prices come couple of times, and then as you can see, this is a complete sideways movement of the price, and then engulf happened. So what happened here? This is a distribution form. This is a distribution form just before my reverse zone. So what will happen? My target will be limited, right, till the distribution, or maybe no, I mean, this distribution is so close that this zone gave a, I mean, small move till the distribution, as you can see, right, and then the zone broke. Okay, so this is, though this reverse zone looks very nice and could have been traded, but the approach was not good, because when price came down to the zone, I mean, it created a sideways movement, and then the breakout happened. So the target of this reverse zone got limited. All of you clear with this example? Any challenges? Any challenges? How it happens? It is so very important to understand the approach. Okay. So this is another example, friends. This is another example. You have again a reverse zone with a pro gap probably, and price moved up. Now when price came down, what happened here in the price? This is approach towards your zone. You are ready to take a trade because you see a good zone here, right? And you want to, this is authentic zone which got engulfed. So this is a clear zone, and you want to take a trade here. Entry, stop loss, maybe targeting here. But what happened here? In just in front of your zone, in approach, in current market price created a distribution. right? A sideways movement and then the breakout happened. So what happened here? Price came down, tested, moved up to the distribution and dropped and engulfed, broke this level. Okay, so this is a dangerous thing when it happens in the approach, the distribution or accumulation formation in the approach just before your zone. So the second type of bad approach is half channel in approach. So what I mean by half channel is, what is a channel? If you remember my Wolfe wave theory, right? What we think in a Wolfe wave, there are 5 points. 1, 2, 3, 4, 5. 5 is outside the boundary and then it is bullishness because this is a descending channel, right? Descending channels are bullish. So 5 goes below and then price moves up. Then somewhere here the 6 points will be. So I have 1, 2, 3, 4, 5 points. Okay. So I mean a complete channel, ascending or descending, a complete channel is represented by 5 points inside the channel. 1, 2, 3, 4, 5 and drop. Okay, this is a bearish channel, this is a ascending channel. Okay, so this is my point 1, 2, 3, 4 and 5. 5 is Wolfe wave outside the upper boundary. Okay, so so this is a complete channel. Okay, but if say you have a zone here and a complete channel happens and the 5th point is happening here, you know this is a complete channel. Okay, and this is this is 1, 2, 3, 4 and the 5th point is happening in your zone. You know this is going to fire, your zone is going to fire because the channel is complete or completed at your zone. Okay, but what if the channel is not complete, right? Why? What I mean by this, I show you an example. This is again my proprietary analysis, my own research, and you will not find it outside anywhere. Go anywhere, you will not find this. This is my proprietary analysis. Okay, so just a second, let me show you. Okay, so say price is moving up, the same thing. There is a support and MIP got created in the price. Okay, our proximal line, our distal line is there. We know this is an MIP I can trade because trend is up, right? But what happened? This is a good zone. When price is coming down, price started creating a channel, right? First thing we need to understand, price will try to create a channel. So in this channel, what happened? Price comes down. This is my point 1 of the channel. I'm sorry. Then price moves up. This is my point 2 of the channel, right? So I can draw a channel here. This is my point 3. Now look what is happening here. The price has reached my MIP, but still the channel here has only created 3 points. So this channel is a half channel and not fully created. It is not complete. It's not a complete channel. For complete channel, we need 5 points. 1, 2, 3, 4, 5. Okay. So in this case, price has reached my MIP, but the channel is not completed. Okay. Here, what happened? Only 3 points being created. What will happen? Price will move up, create the 4th point here. Price will move up from my MIP. It will create the 4th point here and then it will drop heavily and my MIP will be taken out. So this is a poor and bad approach, and my maximum target will be this diagonal trend line, downtrend line, where the 4th point is expected. Okay, So this phenomena I named it as half channel in approach. Okay. So this is come on, Richter. You have 1 point here. You have 2 points here. You have 3 points. You can draw this trend lines, right? Connecting this point and this point, you can draw a trend line. Connecting this point and this point, you can draw a trend line. First of all, you will have this trend line, complete trend line, because you have point 1, you have point 2, so you can connect it. The second one is incomplete. It is going, I mean, if you create a parallel line here, you will know that this is the third point, right? Uh, yes, it will drop to create the fifth point, and break will happen, right? And the break will happen. Yes, Manjula, it is very interesting. A lot of hard work, then only I came to know about this, okay? Lot of this. So similarly, this is a support which got engulfed. MIP supply got created. We know we can spread it, but this is a good zone. But then again, the same phenomena, point 1, point 2, right? We can draw this again. Victor, I'm drawing this trend line. I know there is a trend line. Okay, so there is a expectation of a channel got created. Price breaks. Price breaks. Once the price breaks this high, I know point number 3 is getting created, and the point number 3 is getting created at the MIP. So we know there is a diagonal trend line. Our target will anyway till the diagonal up trend line. Okay, so next thing what happens is the poor and bad approach. Price will come down to the trend line, and then this will break. Okay, so the max target will be till the trend line. You can abort this trade if you want. Okay, this is a poor and bad approach. So let us see an example, right? So this is SRF, right? MIP trade. This is a MIP structure. Price is moving up. This is a, I mean, resistance. This is a resistance which we were taken out, drop based rally. And how prices started coming down? Point 1, point 2. Can I draw a diagonal trend line, friends? Can I draw a diagonal trend line? Yes, I can, right? And then what happens? This is point 1, this is the point 3 is about to be created. I expect this MIP to create the point 3. And what happened? Look, in point 3, it gave a small reaction. That this is what happens. Sometimes it may not go till the point 4, and it dropped and it break. So break this zone. This is a half channel form. Okay. So this is an example of half channel, how dangerous it is. Okay, same way another example, right? So this is another escort chart. If you check, I have taken a hidden zone trade here. Recent time, this is a recent chart, not a old chart. This is all time high, and this is a resistance, this is a resistance, this is a MIP for sure. Price moved up, high, resistance, came down, point 1, moved up, point 2, moved down to my zone where the point 3 got created, and look, point 4 happened here. And what happened? Because of point 5, it came down. Okay, so this is a half channel, and whenever this half channel is getting created, you will see 1, 2, and the 3 here. You can trade this MIP, but your target will be very, very limited. This is what I wanted to tell you. All of you give me a check if you have understood the concept. You need to understand the logic and the concept. Rest you can do it. Okay. Jayaprasad took out all compressions as well on the left. On the left, the compression is getting created here. The compression is about to be created. Okay, so that is a part of the game. Okay, previous slide, I will check it. This half channel needs to compressed or not. The half channel will be compressed soon. I mean, it is a procedure of creating compression. The compression is completed when the channel is completed. Okay, so price will not go and pierce the compression at the point 3, right? It will complete the channel and then only the price will go inside the compression. Richter, really point 1 is in the top or bottom? I feel it is in top. No, Richter. If you go and check the channel, I think you need to go with that session again. In a descending channel, we start marking the points from the low, right? And from then go up to the high. This is how the channel is marked, okay? Same in a ascending channel, we take the high first. We count the high, then the low, then the high, then again the low, and then the high, this one, and this is how it is counted, okay? So for a ascending channel, we start counting from the high. For a descending channel, we start counting from the low. Okay. So let me go to Jayaprasad's question and let me clarify that question as well. So this is the chart, and his question was took out all compressions as well on the left. Yes, very nice. You have seen that there is compression for sure. You are right. Okay, a lot of compression and price has fallen down to it. So this is a see, if you understand the price behavior. Look, in one side we have so much of compression. These compressions are telling me that one day price will go inside this compression. But on the other hand, I have a beautiful MIP. No doubt it's fresh, right? So one side compression here, another side half channel, both together, if you take in consideration, what will happen? You will arrive at a trading decision. Okay, you will make a decision. What kind of a decision? Whether to go long in this MIP or about the trade. Get away from this trade, because there is a half channel that will tell you, oh my god, this MIP is not going to work well. It is only going to give me a small profit. Either I can wait for it to break and then I can think of taking another trade. Okay, so this kind of decisions you can take in the chart, and then you see the price falling through the compression. This will always happen. Very nice that you have picked that out from this chart. Okay, so all of you clear till now? Can I move forward? That is not a liquidity spike. Okay, that is not a liquidity spike. Liquidity spike, I need to see what you, yes, you are right. Oh my god. This is a compression and this is a liquidity spike. You are talking about this. I thought you were talking about this. This is not a liquidity spike. This is a liquidity spike for sure. You are right. You are right. Absolutely right. Okay. So the next kind of a bad approach, right, which scares me, is the opposite key level in approach. This is much easy because you know what kind of a key level can form. So here price is moving up. It's a break limit zone which formed. We know the resistance is cutting through the base candle, and I know this is a break limit zone. Can I trade it? Yes, I can. This is a fresh break limit zone. So I will put my entry, my stop loss. This is a good zone. I want to trade it. But what happened? Price moved up and price created an authentic demand zone just front of my zone, and thereafter price created a rally based off and it engulfed the authentic zone here. What happened with the engulf of the authentic zone? Opposite key level formed, a reverse zone. So tell me, what could be the target of this break limit zone? This is a poor and bad approach. Let me see how many of you understood. What could be the target of the break limit zone if I trade it? If I at all want to trade it? I need to take a decision, right? This is a decision tree, matrix. Yes, it is very clean that we will take the trade till the reverse zone. Okay. Now, if I have say this is an MIP and that got engulfed, so this MIP will act as a hidden zone, will extend it. Okay, so in that case, my break limit zone target will be till the hidden zone and not the reverse zone. Okay, so if it is an MIP, then only then my target will be till the reverse, I mean hidden zone. So hidden zones opposite to my break limit zone is also a dangerous thing. It's a further more dangerous thing because most of the times you will not know there. I mean, there will be no zone, a single drop candle, momentum candle. So a hidden zone can also trap you. Okay, they will create a hidden zone to trap you. So if a hidden zone also is there, hidden zone is a part of a trap zone. I mean, it's a trap zone. So your target will be till the hidden zone and not the reverse zone. Okay. So this is once that happens, some hidden zones, some reverse zones, some MIP, some I mean break limit zone forming opposite to your zone. Even if it is a good zone, it will not give a big reaction. Or what will happen? Price will start oscillating. Sorry, price will start oscillating within this two and create a consolidation until it breaks either side. Okay, so this is something happens there. So the max target will be the reverse zone or the hidden zone. Okay. So price will move up. Our break limit zone will certainly give some reaction. It is not that it will break, but still there is opposite zone, so we will not get a big target. Okay, and eventually it may break. Okay. So this is an example, my dear friends. This is also a live example. Sometime back, I mean, if you go to this chart, this is HDIL. You can check this place. This is daily chart, right? Uh, or 60 minutes. You can check. I mean, you can back test. You can have the numbers also. So what happened? This is a authentic zone, and this is a reverse zone got created. Price moved up. While price moved up and then came down to the reverse zone, price actually engulfed authentic demand. So an opposite reverse zone and a source of engulf here, a source of engulf got created. So once that happened, I know that I can trade this, but my maximum target will be the source of engulf, right? And what happened thereafter is a history. Price hit the source of engulf, as you can see. This is the source of engulf. Sorry, this is the source of engulf, and eventually it broke the level as expected. It got broken when I took this. Pick that day. It was here. It was a live chart, but thereafter it broke. Okay, you can check it. Friends, give me a check if you have understood this one. Poor and bad approach. Okay. So another example, friends, there is a reverse zone here, and I mean, sorry, this is an authentic zone, and this is a reverse zone and source of engulf here, and authentic supply was there, and what happened? This is what happened when price returned after a long time. It created a small MIP just before the source of engulf, right? This is a good zone, but it created a MIP just before it. I show you the MIP a little closer, right? This is the MIP as you can see, this is a support which got engulfed, price came down, right? Price came down, then moved up, then it dropped, right? It broke this level. So this is the MIP, and the MIP got formed just before the source of engulf. So if you are in this trade, as you can see, the MIP has formed at the level itself. Okay. So if say you have entered this trade, though you have a distribution, you know that the price is not going to give you a big target, but still, if you are in this trade, and by mistake you have entered and you see that there is an MIP formed opposite to your zone. It is better when price moves up and tries to touch the MIP. At that time, you book the trade at cost. So I have placed this example just to make you understand the situation. If you have understood the situation, you can take your own trading decisions. So this part, the approach part is basically taking trading decisions. Whether I am going to take the trade, whether I am going to abort the trade, or if I am already in and I see something wrong, what should I do? This is what this session tells you. Generally, that doesn't happen when it happens in front of you. Okay, Sanshul? And this trade doesn't have RR because you have a distribution as well. So generally that doesn't happen. When it happens, I mean, it is not compressed when it is happening inside your zone. Right? Not possible. It will not get that much time. It is forming inside your zone. Understand? How could it be compressed? Because compression also price has to touch it, and it is inside the zone. If it touches inside the zone, it will give reaction. Right? So that is not a possibility. Okay. So this is how, if a opposite zone gets created in front of your zone, it is very dangerous and you should avoid this one. And this is how many trades can break. Okay, so this knowledge will help out to save your money. Okay, so this is another approach which I don't like. Sometimes works, sometimes don't. Right, so what happens? This is a break limit zone which forms proximal line, distal line, and I know I can take a trade there. And just in front of my break limit zone, outside bar got created. Novice gap and I engulf. Right? So if a outside bar gets created in front of my zone, again that can be dangerous. And if it is fresh, then my maximum target will be the outside bar, and therefore price can break my break limit zone. Okay, because outside bar is a good structure and it's a part of trap zones as well. It's an advanced gap structure. Don't forget, advanced gap is a trap structure. Okay, so this is one outside bar in approach. Okay, so this is an example. I have an MIP here. I have an authentic demand zone. This is a reverse zone form. Another authentic demand zone was there. Price engulfed it. Price came down to this level, and in front of it, a doji formed, and immediately price gapped up a little, moved up first, and then came down. This is a small outside bar here. A small outside bar, very marginal gap up, right? And what happened? My reverse zone gave a small reaction till the outside bar, and then the reverse zone broke. So this is one very important thing. Another reason for this reverse zone to break is price directly went up and touched the MIP. Okay, so whenever it goes directly and touches the MIP, it breaks the reverse zone. If you remember the session, I have discussed about this as well. So outside bars sometimes act very, very dangerously. Okay, now another very important and very bad approach is QM in approach. For QM, we have a dedicated session which will happen next Saturday. So we will discuss about QM there in a elaborate manner. It has many, many things. But as of now, I'm just showing you what happens in the price chart and what just for the compression part. I will not. So again, price creates high, higher low. Authentic zone gets created, price comes down, hits the authentic zone, creates higher high, higher low. It creates another higher high, comes down, engulfs the higher low, and hits the MIP. Now MIP is fresh; it should have reacted, but opposite to the MIP, we have a QM. And when there is a QM in approach, the MIP target will be very, very less. And QMs are very, very strong patterns, advanced patterns, and whenever they form, they changes the trend and big fall can be expected. So this is a QM formation. The formation of a QM is higher high, high low, higher high, lower low. And when that forms in front of your MIP, the MIP will not give much of a reaction. So this is a poor and bad approach. Okay. So this is another poor and bad approach in the chart. So this is an example. This is an MIP. As you can see, this is a fresh MIP or something reversion or whatever. Right now, what price did? Created a high, low, higher high, lower low. And what happened? This is the QM level and the MIP gave its reaction, but the QM breaks it. So my target is limited in that case. So this is an example of QM in approach, and whenever that happens, that is a poor approach for your zone. So friends, give me a quick check whether you have understood all these kind of approaches. I know first time you are understanding all these things will take some time to grasp. You need to go through this video a couple of times as well as charts, and then only you will be able to grasp it. But yes, at the end you need a lot of practice. Without practice, you will forget all of these things. Understand? For last so many sessions, I am teaching you every session something new. Not one, I mean 4-5 things which is very new. Right? I hope you have never learned what you have learned here today. Right? So, a lot of new things, I mean, if you do not practice, you will start forgetting. You need to practice, yes, grasp it slowly, but do practice. If you do not practice, you will forget it for sure, because when you will be opening the chart, you will not find anything. The chart will be blank. So go one by one, and all the whatever I have delivered you till now is going to help you. So do practice all of them, and you will find beautiful trades, big trades, my dear friends. Okay, so it's, yes, it is very interesting, and you have to practice. So that brings me to the end of today's session. Now get back to your charts and analyzing on at least 10 scripts, and be familiar before the next topic. Save your work share your work with your mentor. All the best. Thank you. And if you like this session, if it doesn't, if you have some serious complaints to be made, or a very nice appreciation, please do go ahead and write some feedback to me in info@questionwithghosh.com, and I will try my level best to attend all of them. If there is anything which needs to be taken care of, I will do that at my own level, and I will try to help you to become successful. So please do write at info@questionwithghosh.com. Thank you. Thank you very much for joining. If you have any questions, you can ask me now. Today we are not going to open the charts. We will anyway do it tomorrow in live session. So let it be for the live session. And live session will be now more interesting, because I will be talking about approach and many things, right? So you will have an idea what I am doing there. Okay. So any questions, any challenges, friends? So if you have any confusion for channels, please go back to the session where I have taken support resistance and channels and LCZ. Just go through that session. That will help you to understand the concept of half channel. If you are clear about the full channel, you will be clear about half channels as well. It is not difficult. Okay. So all things are related. Okay. So thank you very much. Thank you for joining. See you then tomorrow at 8:30 a.m. Yes, Richter, the schedule was for reversal pattern, and at the beginning I said I have changed the schedule. At the beginning I have discussed that I have changed the schedule because I wanted you to go through the approach part 2 and then go for the reversal pattern. We will discuss the reversal pattern in the next session. With that, we have already discussed in the beginning of the session. Okay. So thank you very much for joining. See you then. Bye bye.